we were at a stage of growing pains when in 2012 onwards we had embarked on a growth strategy, so much so that our land bank has increased by more than sevenfold from just a mere modest 16,000 hectares to a total of 105,000 hectares. That itself is a reflection of our aggressive growth strategy from 2012 until 2015. Common in 2016 was based purely on the volume or the quantity of our products produced, basically both the CPO, crude palm oil, and also the FFB, fat fertilizers. Because we have to divide it into the first half and the second half. 2016 was really a tough year for tea plantations as well as the whole industry in general. Why? Because in 2016 we saw the first half of the year where the commodity prices was at its lowest over 5-6 years, and also the production was drastically affected by the prolonged dry weather, which we call the El Nino phenomenon, and we had experienced the full-blown effect of the El Nino in the first half of 2016. You can see from our data that our yields were one of the lowest company yields, one of the lowest over many years. And fortunately, the price of the commodity prices recovered in the second half. To give you an example of how low the prices were in the first half, it went down to as low as about 1,900 ringgit per ton of CPO in one of the months, if I'm not mistaken, in February. And at the same time, fortunately, the prices of the commodity recovered to a high of 3,300 ringgit per ton in the last quarter of the year. Therefore, plantation companies, including tea plantations, had exploited the rise or recovery in commodity prices, and there was a sign of relief when the second half results were able to compensate the poor performance in the first half. Nevertheless, I must tell you that for these plantations, we expected a double-digit decline in FFB yields, but fortunately, we only experienced a decline of only 7% of the production compared to other main industry players, whether they are big or whether they're medium size, small size. Most of them had experienced double-digit declines in terms of production. So this was brought about by our strategy of aggressive replanting from 2009 until 2013, as a result of which there was always new areas coming into maturity as we move towards new years. So at the same time, for 2017, we're going to have more areas coming to maturity, resulting with the continuous revenue streams as an upstream plantation. No one has ever anticipated that the tough operating conditions to prevail for so long. In 2016, two main factors that has really impacted the performance of tea plantations as well as other industry players, namely the prolonged El Nino weather anomaly, which we had received the full-blown effect in the first half of 2016, and number two was because of very low commodity prices prevailing at that time. Because low commodity prices was brought about by high stock levels and the supply-demand dynamics of the global palm oil. So these 2 points have been beyond our control. definitely beyond the control of any plantation company, and we have never expected that the prices would be coming down so badly after many years of maintaining above 2,500 ringgit per ton of CPO. I am happy with the achievement for 2016, mainly because we have been able to ride the storm. It was really indeed a terrible year, 2016. I've been in the plantation business for the past 18 years in Tabung Haji. I've not seen this kind of situation prevailing over a long time. It's not so that it has impacted many companies as a whole. But nevertheless, this plantations has done reasonably well for 2016. We had clear strategies to mitigate the challenges faced. One of the main strategies that we embarked on was increasing our operational efficiency, namely from the oil extraction rate. We have improved our oil extraction rate. Average oil extraction rate was about 20% compared to previously 90 plus. We had embarked on a task force to improve the oil extraction rate of all palm oil mills in the group. Secondly, we had embarked on cutting back our capital expenditures and operational expenditures in line with the declines in our gross margins. Thirdly, in terms of marketing strategy, we had realigned our way of selling CPO and FFB. In terms of CPO, we embarked on more long-term and forward sales compared to spot sales. That was one of the ways where we can leverage and catch prices when they are on the upward trend. The rationalization exercise was mainly meant to pare down our borrowing. We had explained that our gearing ratio was maybe on the high side. It has actually reached about 0.75. So we need to pare down to a level of 0.5, so much so that if this will have sufficient buffer if the prices of CPO were to come down again. At the same time, with that current level, it will be more comfortable for these plantations to manage, and borrowing costs will definitely be much lower. You will continue to 2015. There are still a number of assets which we need to dispose. These are assets which are underperforming and non-core or non-strategic assets. So we made a certain decision to dispose these assets to pare down our current borrowing to a better level. These plantations is just a member of RSPO, but we understand that we are not certified with RSPO. Nevertheless, we manage our plantation in a very sustainable manner according to a very stringent code of conduct and the standard operating procedures, which are in line with the standards and criteria of the RSPO or the Sustainable Agency. At the same time, we are currently going through a process of certification with MSPO, Malaysian Sustainable Palm Oil, which will be completed in due course. So we strictly deny this. Three allegations were, as you said just now, child labour. We've never employed any child labour in all our plantations. It's basically above 21 years old. Number two, in terms of deforestation, we have never cleared any plantation land from forest, virgin forest or even forest. These are all areas which have been locked over and considered as non-commercial locked over forest. And these are areas which have been allocated or designated to the plantation. Since 1998, we have in place a very strong zero burning policy And from then on, we have implemented this policy rigorously across all our plantations, whether in Malaysia or in Indonesia. Outlook is expected to be good in the first half, but in the second half, when production has recovered from the lagging effect of El Nino, then we're going to see higher production trends normalized among all the plantation companies, and this might push the commodity prices to be somewhat lower than prevailing first half prices. Our strategies will be focused on three areas. Number one is actually cost optimization at all levels across the board. Two, increasing or continuing to increase our operational efficiencies from the oil extraction rate and the production of fresh fruit bunches. And number three, we will continue with our replanting exercise to maintain an optimum age profile in our group. To the shareholders, we thank you very much for your continued support. I'd like to assure you that we fully recognize the challenges of the environment today. Our company remains resilient, robust, sustainable, and ready to create further value in years to come.